Good morning. Welcome to Monday, the 25th of May. You're listening to Ainsley News. Today we're talking and comparing new currencies, gold and silver, and some stunning charts today as well. We are at an interesting juncture at the economic response to the COVID-19 induced crisis. We and others have written extensively on the unprecedented scale of digital money expansion of the Fed and US government. The Fed's balance sheet has now increased nearly $3 trillion over the last couple of months, to total more than the value of all the gold ever mined, over $7 trillion. Whilst colloquially referred to as money printing, there is little printing involved rather than the tapping of a few keys on some computers, and voila, they create more money than ever before. Here's showing a little chart. Total assets, less eliminations from consolidation. Pretty impressive. And the US government spending increased more in April than of all of 2019, nearly $1.3 trillion. Shown in the next graph, US public debt increase, full year 2019 versus April 2020. It's an impressive $58 billion per day. But few talk about the actual printing of paper notes or dollar bills, and they haven't actually mucked around there either. According to the Fed themselves, currency in circulation increased by no less than $122 billion in just the period of March to May. The following charts put that into perspective when compared to the entire years since 2013, when the digital presses printing went wild. Shown in the next chart, total annual increase in US currency in circulation versus 2 months during March to May 2020. Now comparing that to real money, and to highlight why precious metals are real money by virtue of intrinsic value through constrained supply, let's look at how much gold and silver could be bought with those freshly printed dollar bills in the context of production. Last year, the world produced 800 million ounces of silver and 111 million ounces of gold. Of course, those following the GSR right now will be dividing 800 by 111 to equal 7:1, comparing it to the current 100:1, and probably feeling pretty good about their silver investment. So when you do the math and chart that, it puts it all into perspective. This next chart shows the amount of silver and gold production based on new currency in circulation from March to May 2020. That's a lot of silver. To spell that out, it would take 9 years of silver production and 9 months of gold production to equal just the dollar bills created in less than 3 months. The speed of this increase in comparison to total circulating notes is staggering and may talk to another issue. At 31st of December 2018, total currency in circulation was $1.67 trillion. In less than 17 months, that's risen 15%, or $250 billion. As you can see, almost half of that happened in just the last 2 months. Check out the vertical nature in this chart, just here, showing currency in circulation. It's a pretty steep rise. There are a couple of takeaways in this chart. First, yet again, we are looking at a chart that starts to leave, becoming parabolic, decades of sound money from 1973 when we left the gold standard. Secondly, look at the jump in circulated notes during the GFC in 2008 to 9 and compare to the more vertical and already comparable jump in the last 2 months. There will be many explanations, but a large part of this demand for notes is as people withdraw cash from the bank on concerns of a bank run or bail-ins, or even cash bans. Australia has already seen a massive demand for new notes as cash is withdrawn from banks. If you are going to cash ahead of the further market turmoil, consider the difference between currency and real money. That's news today. We'll catch you all tomorrow. And remember, you can always read all of our news via ainsleybullion.com.au.